All right, let's get more insight and let's bring in Senada Adzem. She's a realtor associate and executive director of luxury sales with the Douglas Elliman Real Estate. Senada, good to have you with us tonight.
Thank you, Michelle.
So Senada, just before the Brexit vote, the average property in London was up 5.1% from a year ago. Now, of course, the vote result was somewhat unexpected, took a lot of people by surprise. So how much of a game changer is this?
This is a huge game changer, Michelle. I was actually in London for 2 weeks before the vote, and most of my clients knew that the referendum was going to have a huge impact on their real estate holdings, and there's a lot at stake. There are over 12% of foreign buyers in terms of ownership in UK and London real estate.
All right, so we don't really know what the status means for those foreign buyers. It's not clear if they'll be allowed to retain those properties. It's not really clear what it means for them in terms of border control. So there's a lot of uncertainty.
Yes, the uncertainty is the biggest problem right now, really, because when you have investors and buyers have their confidence shaken, then they don't want to invest the money immediately. They're in the whole pattern right now, and they're actually deciding whether to take that money elsewhere. As of now, they're taking most of their money and they're putting it into the United States and Canadian real estate.
Well, one of the issues is that it wasn't just wealthy foreign investors. You also had a lot of foreign workers coming to do work in the UK, for example, a lot of Polish people.
Yes.
And you had UK people buying houses and then renting them out to those people. So you had buoyancy in the rental market and buoyancy in the housing market. So what degree of depreciation and percentage-wise do you anticipate happening and over what course of time?
Most researchers anticipate between 8 to 10% of depreciation over the next year.
Is this across the UK or London specific?
That's across the UK. In London, they're anticipating up to 15%. So if you couple that with 12% devaluation of the British pound compared to the US dollar, many people will actually see that as a good thing because the market was so strong, it was growing year over year, and many people were outpriced for a long time.
But London is still a global financial capital.
Yes.
It's going to take a long time for this to unwind, if it even does unwind, because there's still uncertainty about where the status will be until Article 50 is invoked.
Yes.
So is it really fair to think that the London market is going to be in for such a sharp correction?
It's not going to be a sharp correction, but it is going to be a correction. Most people are anticipating, and actually smart, very sophisticated investors are standing by. They're on sidelines with lots of cash. They're waiting for the market to correct so they can go in and scoop up some great properties, because you're absolutely right. London is a safe haven. Most foreigners see it as a place where they can put their money to work, they can come and enjoy the lifestyle, and they really love it. So I think it's going to be safe in the long term, but in the short term, because of the uncertainty you mentioned, it's going to be a little shaky.
Well, from a commercial real estate point of view, a lot of companies wanted London as a gateway to Europe, to that single currency market. And many companies were threatening to pull out should the vote be to leave the EU. Have you seen any downturn in commercial real estate?
Right now, most companies are actually on hold. They have decided not to make any big investment decisions when it comes to changing their headquarters, perhaps to Brussels or Frankfurt. We don't know where to yet. But we haven't seen any companies moving their headquarters yet, and we haven't seen the impact on UK real estate just at this point. However, people do anticipate there's going to be change in workforce housing. Just like you mentioned, most people working in the UK right now come from Poland and Romania.
Right.
However, most investors in the UK come from China, Russia, and the Middle East. So it's a very interesting dynamic right now, because you have people who were there as immigrants working, right? They're going to have a rather difficult time, but then you have the very wealthy investors who were slightly affected by the change in capital gains tax and also stamp duty.
So let's talk about these wealthy investors, because the theory is that they're going to move their money, their properties from the safe haven of London to the safe haven of New York and to other cities in the US. Is that correct?
That's absolutely correct. We've seen many of these ultra-wealthy, high net worth clients moving their money from London to New York, to Los Angeles, to Miami, and very importantly to Canadian real estate markets such as Vancouver and Toronto as well.
Globally, which other housing markets are going to benefit from this?
Vancouver is going to benefit the most. It's been the hottest market in real estate globally for many years now, primarily fueled by the Chinese demand, and it's poised to remain.
Well, here's the interesting dynamic, because on the one hand, you're going to have increased demand from people looking to put money into the U.S. On the other hand, the Brexit vote means that the U.S. Fed will most likely keep rates low and mortgages will remain low, allowing buyers to have easier financing. So how does that play out then?
When it comes to the Brexit impact on U.S. real estate, what's going to happen is that the Fed will have to keep the rates low. As of now, they're at historic lows. You can get a 30-year fixed rate mortgage for 3.41%. I mean, that's unheard of. So many people who can mortgage their property and afford properties for the first time, they will of course mortgage it. Unfortunately, many foreigners cannot get mortgage at all. And most ultra high net worth clients don't finance their purchases anyway. So I think it's going to be a trickle-down effect when it comes to the US. It's going to be benefiting people who are in the lower to middle segment for real estate, and I think it's going to be a very positive effect in the US.
All right. Thank you so much, Senada Adzem, Realtor, Associate and Executive Director of Luxury Sales with the Douglas Elliman Real Estate.